What do you make of the market action so far today? I mean, it's not going to get close to getting back what we lost on Friday, but it seems interesting that we do have a bid given escalations in the Middle East.
Yeah, look, sometimes markets feel a little bit inhuman at these points, right? Like conflict really isn't good. We all would like to see, relatively peaceful resolutions here, but honestly, markets are trying to figure out what the fundamental impacts are going to be. Unless we have really oil and other price shocks sticking around longer, markets could quickly look through these volatility episodes. So honestly, oil at $70 really doesn't change our thesis here. As we move past the worst of tariff fears, we think the market can find some footing here and companies can, start reinvesting in businesses again.
Drew, what do you make of the volatility regime that we're seeing right now? Missiles are flying in the Middle East, and the VIX gets up to about 2021. The tariffs hit back in April, and we see the VIX go up to close to 70 to 80. Is the market prioritizing the right things here?
At least short term, yes. The tariffs at the level on Liberation Day actually challenged a lot of business models. There were some companies with relatively low margins, not a lot of pricing power, that you could honestly see going out of business at those rates, or at least needing to aggressively reshift where they manufacture, aggressive cost structure changes, and a lot of impending near-term losses. From a fundamental perspective, again, unless we have lasting pressure, like we've seen in other conflicts that, again, were necessarily short-lived, but the pricing impact on the commodity front was relatively short-lived, I think the market is properly looking through this, at least for now. But just honestly, to tie this all together, it's look at the commodity market for clues around inflation and how that could really read through to economic impacts in the U.S.
All right, Drew, before we let you go, the mystery chart we put up and your word of the day. Let's take us through that.
So it's RSG. And honestly, this all ties back to what we think our word of the day should be: scarcity. What's scarce beyond, honestly, birdies at Oakmont here has been companies that are improving ROE based on margin expansion and efficiency gains. RSG has both of those. So this is a company that has passed an investment cycle, and here they're reaping the rewards. Gotcha. They have industry best free cash flow conversion. I think it's a really good stock to own in this environment.